So Miss Moneyworks here, and today we're going to talk about credit. Having excellent credit is just so important because whether or not you want a job or you want a place to rent or you want to buy a home or you want to get a car or you need a business loan, you need to have good credit. But you want to shoot for excellent credit because when you have excellent credit, you can get 0% interest rates. So that means that when you're borrowing money, you don't have to pay back the interest. And I've talked to you before about being on the wrong side of compound interest. So when you owe debt and you have a high interest rate, that rule of 72, the higher the interest rate, the higher your balance doubles. Well, it works against you, if you recall, when it's a credit card that has a high interest rate. That means that it's doubling quicker. You know, it could be doubling every 2 to 4 years, actually, when you have a high interest rate on your credit card. So that's why you want to have a low interest rate on your credit card. You want to have a 0% interest rate on your credit card. And the way to do that is you want to have excellent credit. So how do you have excellent credit? What is excellent credit? So basically, excellent credit is like the mid 700s. So it starts at the mid 700s. So as long as your credit is about 750 or higher, you have excellent credit. So how exactly do you achieve excellent credit? Well, what I highly recommend is the Credit Karma app. I've been using the Credit Karma app for a few years now, and that's actually how I have excellent credit now. But let me back up. I didn't always have excellent credit. Matter of fact, I had bad credit. And it's because, like you, I was not taught how money works and about credit coming up. So I highly recommend you educate yourself about how money works and credit. So if you don't have this book yet, reach out to me to get the book because milestone number 4 is debt management, which is dealing with credit. So if you look at page 91 and 92 of the How Money Works book, it talks about credit and how to have excellent credit. So definitely read page 91 to 92 of our How Money Works book, okay? And then I'm actually going to go through some examples. But before I do that, I really want to share with you my credit story. So like most of my adult life, which is about 20 something years, believe it or not, I know I look good, you know. But anyway, I had fair credit. And it's because, like I said, I just wasn't taught how to have good credit. So when I got my first credit card, I was in college and they gave me a $300 credit limit. And I was like, woohoo, $300, acting like it's free money. No, I have to pay that money back. And then they also had an annual fee and a processing fee. So by the time I got the card, I already owed $150 just in their fees. So if I did charge it, I'd be at the credit limit of $300. And if you want to have excellent credit, then it needs to be 0 to 10%. Good credit is under 30% usage of your card. So I was already at 50% with the fees before I even used it. And then by using it, I was at 100%. And that's why I had bad credit. So you want to keep, so number 1, you want to keep your credit card utilization at 0 to 10% to have excellent credit. So in my example, that $300 card that I got in college, I should have only had a $30 balance on there. I should have only had a $30 balance on a $300 card because that is 10%. Instead, I had a 50% balance because I had $150 on that card. And so another mistake I made is when I graduated from college. When I graduated from college, I got a nice new apartment and I got it fully furnished. And the furniture company that I got it from, they said you have no payments, no interest for like 3 years. So it was like 0% interest, 0 payments for 3 years. So I took it to mean that, oh, well, I don't have to make payments for 3 years. And my interest rate is 0. I didn't even know what that meant either. So 3 years later, I had not made one payment because they said no payments for 3 years. And I'm a literal person, so I took it literally. So I literally made no payments for 3 years. So what happened was, after the 3 years, they tacked on all the interest that I had not paid for 3 years. So I ended up owing double on the furniture. And that sunk my credit, and I made a few payments on it, but I was like, oh my God, I'm making the minimum payment, which is another no-no. Don't just make the minimum payment. I was just making the minimum payment, so it was just getting bigger and bigger, and I just said, forget it. And so that also ruined my credit. So number one is paying on time. That is the biggest factor of having an excellent credit score. You cannot make any late payments. So what you want to do is get on auto pay. By being on auto pay, you will never be late. And then I also think that you should not just pay the minimum payment, because when you pay the minimum payment, it takes you extra long to pay off the card. So set your auto pay a little bit more than the minimum payment. And if you can afford it, just pay it off every month if you can. That's what I told my oldest son, is just pay it off every month. And that's what he's always done since he was 19. So he's always had excellent credit in the 800s because he always pays his balance off every month. If you can't afford to pay your balance off every month, well, just pay as much as you can. And like I said, put it on auto pay so that you're never late, because that is going to be the biggest determining factor of your credit score, is paying on time. The second biggest determining factor is how much of the credit limit that you're using. So if you have $1,000 credit limit, you shouldn't be using more than 30%, no more than $300. And that's just to have good credit. But again, to have excellent credit, it should be at 0 to 10% credit card utilization. So those are like my biggest tips are make sure that you never have a late payment. And number 2, don't just make the minimum payment. And then number 3, have a low credit utilization. Don't use much of the credit. And it's like, well, why get a credit card if I can't use it, right? I know it's like a trick, right? But so if you need to use it, that means that I guess you really shouldn't have it if you like really, really need it. You know, it means that you need to make more money, you need to increase your cash flow, and it might mean that you need to do a better job with what you have. So take a look at your budget. It also may mean that you really need to work on your emergency fund. Your emergency fund is actually milestone number 3 in our book. Debt management is milestone number 4. So if you're in need of credit cards all the time, it means that you need to work on milestone number 3, which is your emergency fund. And I'll talk about that at a later date. So I hope that these tips helped you. This is how I have excellent credit now. And a bonus tip, you also need multiple credit lines. So you don't want to just have like just one credit line. You need to have multiple credit lines. Like I've got about 30 different cards and, you know, different things. I've got a mortgage. I've got 2 car loans, my car, my son's car. So I have multiple trade lines. I've got a couple of store accounts, a furniture store account, a mattress account. I've got some department store accounts. I've got regular credit cards. So I have a diverse portfolio of different types of credit that I'm able to pay on time every month. So remember, that's the number one thing, is to pay on time. Pay on or before that due date. And if you want more tips, just reach out to me to get our book or to meet with me for a free consultation. I would love to sit down with you either at my office or we can meet on Zoom. And I look forward to hearing from you.